Welcome all to the seventh video in this series, and the topic that we are going to cover is: where is the stock market headed from here? Will there be a stock market crash? To avoid missing on these useful videos, please click on the subscribe button at the bottom of this video and also click on the notification next to that. This will ensure that you won't miss any of these useful videos in future. Let us look at the key factors impacting the current stock market. The producer price index, a measure of what companies get for the products in the pipeline, increased 0.3% for the month and 7.4% from a year ago. Although this number was a little higher in the current month, the overall trend is downward. A 38% surge in wholesale vegetable prices helped push the food index up by 3.3%, offsetting an identical 3.3% decline in energy costs. Markets will now watch the more closely track the consumer price index, which is due out on Tuesday morning, December 13th at 8:30 a.m. Last month it was 0.4% increase, and for this month it is expected to be 0.2%. If it comes as expected at 0.2%, then that could give a good support at the current levels of 3,900 in the S&P, and the market could start moving up much higher. If the CPA number comes higher than that, we could have a correction that could take S&P to the 3,600 level, which is around 8% correction from the current level. The most crucial factor is the Fed meeting and rate hike announcement on December 14th, Wednesday at 2 p.m. The expectation is 0.5% rate hike, and based on the CPA numbers, the language can be hawkish if the CPA numbers are higher than expected. And that could bring the market down to its support levels of 3,600. Here we can see the 3-year chart of the producer price index year over year percentage increase. PPA is coming down from a peak of 11.66% on March 22 to the current level of 7.4%. If this trend continues, then it is good for the stock market in the medium to the long term. This is a 5-year chart of the CPA year over year percentage increase. Similarly, CPA is coming down from a peak of 9.06% on June 2022 to the current levels of 7.75%. If this trend continues to the 3 to 4% in the next 6 to 9 months time frame, then it is very good news for the stock market. The Fed could stop hiking rates around the second quarter of next year if that happens. Now let us do an analysis of the daily and the weekly charts of S&P and see where the market is headed. Now let us look at the daily and the weekly chart of S&P and see how it is showing up currently. This is the daily chart of SPY, which is a ETF reflecting the S&P, and this is a 2-year chart, and we see that after its recent correction and support at around the 3,400-500 levels, it has come up a lot, and currently it is facing some resistance around the 3,908 range in the S&P, 3,980 range in the S&P. And in August time frame also, we see that it got resistance around the 200-day moving average and it went down. So now it is still around that same 200-day moving average, and it is trying to break out above that resistance level. One thing that could give us a momentum is like if the CPA numbers come little lower than or expected, or if it comes as expected or lower than expected, and the Fed's language is not hawkish, and as we know the rate hike is going to be around 0.5%, then there is a very good chance that it will break this resistance level and move above the 4,000 level in the S&P. So that is a potential option. And now let's look at the weekly chart for a 5-year period, and we see that it's slightly there is a potential of it coming down also based on these two key factors that we discussed in the previous slides. One is the CPI numbers, which is coming out tomorrow. If it is higher than expected, and the Fed language is also hawkish on Wednesday, then there is a possibility of it coming down also from the current levels. But it has a strong support around the 3,600 in the S&P, so which is around 8 to 9% down from the current levels. So market has got the potential to go either up above the 4,000 level based on some positive news and language, or it has a potential to go to 3,600 levels based on negative CPA numbers and hawkish language from the Fed. So to conclude, this week is crucial for the stock market with the CPA numbers and the Fed language that will determine the short-term movement of the stock market. You can expect the market to move above the 4,000 level in S&P if the CPA numbers are as expected or lower. If not, it can go down and test the next support level around the 3,600 level in S&P. So let's see what happens, and we'll follow up in a future video in a week's time. Thank you all for watching this video, and stay tuned. Bye. Other videos that are coming up: how to buy your stocks using a brokerage account. This is very useful for beginners and first-time investors. Traditional IRA and Roth IRA, and how do you invest in them for the people who are interested in the retirement investing. Simple index fund investment options: stocks, mutual funds, ETFs, and bonds, and how to invest in them. Dividend stocks and how to choose the dividend stocks. What are options? The basics of call option, put option, and covered calls. Fundamental analysis of stocks. Technical analysis of stocks using basic chart patterns. Candlesticks like doji and how to use them in your investment. How to measure your portfolio performance. So many more video sessions coming up to teach you a lot on the investing related topics. If you like today's session, please click on the subscribe button and click on the thumbs up button to show that you like this video. Thank you for watching this video, and see you soon in the next video. Disclaimer: these videos are strictly for educational purpose and do not provide any advice, tips on investment, or recommend buying and selling of any stocks, options, ETFs, mutual funds, or bonds. We neither take guarantee of profit nor stand responsible for any losses of any recipient. The recipient of this material should get their own professional advice before doing anything based on this information. The recipient is advised to read the above information carefully before any investment and taking any decision on that.